25 years ago in 1999, paranoia swept the world as we prepared for Y2K. The European Union adopted a single currency with the euro. Wayne Gretzky, the Great One, retired after a long and record-setting career. And the Canada Pension Plan Investment Board began investing the CPP to help keep Canada's national pension plan promise. Our first transfer in March 1999 was $12 million. Today, we've grown the CPP fund to more than $600 billion. Great care was taken to lay the foundation of this organization to help more than 22 million Canadians and future generations build financial security in retirement for decades to come. We took major steps in setting our long-term strategic direction, including the decision to move to active management in 2006.
Our investment strategy is designed to deliver a well-balanced and globally diversified portfolio that will maximize returns without incurring undue risk. The investment portfolio is broadly invested across asset classes and geographies to generate steady-state returns and be resilient in the face of wide-ranging market and economic conditions. We hold investments in public and private equities, fixed income, credit, infrastructure, and real estate in more than 55 countries around the world. Our measured approach protects the CPP fund through the inevitable ups and downs of financial markets.
In 2008, we expanded internationally, opening offices in Asia and Europe. This led us to one of our largest ever real estate deals, the Barangaroo South Office Towers in Sydney, Australia. As a global investor, we acquired Ports America, North America's largest marine terminal operator. Back at home, we invested in office towers, highways, renewable energy, and telecommunications. Some of our Canadian investments include Shopify, Enbridge, RicoChem, Nutrien, and the 407 Express toll route, as well as real estate partnerships with Oxford Properties and Tricon Residential.
Our code of conduct and guiding principles underscore everything we do at CPP Investments. It's about doing the right thing and doing it the right way. Our board of directors provides the highest standard of governance to help ensure CPP Investments is successful in meeting its goals, and we take this responsibility seriously. We have a highly qualified, independent board of directors with representatives from across Canada and around the world. One key success factor is our independence. Governments do not direct how or where the CPP fund is invested, and the assets are kept separate from government funds. When you bring all these elements together, transparency, trust, independence, strong culture and governance, and a clarity of purpose, well, those are the key ingredients for success.
In 2021, the CPP fund reached $500 billion in value, 7 years ahead of schedule. A year later, we committed our portfolio and operations to be net zero by 2050. At CPP Investments, it's not simply what we do, but how we do it that sets us apart. We successfully managed the global financial crisis, the COVID years, and more recent challenging events. Through it all, we remain focused on the long term. As we mark 25 years of investing for Canadians, we're proudly committed to earning your trust each and every day. Because we're not just investing for today or tomorrow, we're investing for generations of Canadians.
Hello, everyone, and welcome. Thank you very much for joining us today for this virtual public meeting. My name is Tara Perkins. I'm a managing director and the head of global public affairs at CPP Investments, and I'm going to be moderating this session today. I'm very pleased to be here alongside our President and Chief Executive Officer, John Graham. Just before we begin, I would like to take the opportunity to acknowledge the lands and the traditional territories of the Indigenous peoples in Canada. Since CPP Investments was founded 25 years ago, we've been holding these public meetings in every province across the country that participates in the Canada Pension Plan every second year. And some of you might have actually had the opportunity to join one of those meetings with us in person from April until earlier this month. We hold this national virtual public meeting in addition because it provides us with an additional chance to speak to more of you, the Canada Pension Plan's contributors and beneficiaries, and take more questions about how the CPP fund is being invested. So we're going to spend the bulk of this session today on those questions. But just before we get to that, I'm going to turn things over to John to provide an update on CPP Investments' performance and strategy.
Great. Thanks, Tara. Welcome, and thank you for taking the time to join us today. I'm delighted to provide you with an update of the CPP Fund and the work we do as the investment manager, as well as answering all of your questions. The role of CPP Investments is clear. We seek to generate as much investment income as possible without taking undue risk, in the best interest of you, the contributors, and beneficiaries. That singular goal, to achieve a rate of return high enough to help sustain pension payments for millions of Canadians today and tomorrow, is at the heart of everything we do as an organization. We stay focused on this task and operate free from political interference and pressure from interest groups. We want to maintain the highest levels of public trust and confidence in the work that we do and the way we do it. Transparency, such as timely and continuous disclosure in this virtual public meeting, and the in-person meetings we held recently across the country, is the foundation of accountability and one of the ways we earn and maintain trust. We're all very proud that according to the Global Pension Transparency Benchmark, in 2024, CPP Investments ranked number 2 in the world, and we tied for first on the critical issue of governance. So here's a brief update on our performance, our growth, and our investment strategy. And we know Canadians are dealing with many concerns: affordability, climate change, and the constant news of global conflicts and challenges. Fortunately, there's one thing that you don't need to worry about, and that's the strength and resilience of the CPP Fund and your future retirement. CPP Investments continues to deliver stable returns. Our 10-year rate of return was 9.1% as of September 30th, 2024, and the fund reached $675.1 billion. Our investment activities have created more than $460 billion in net investment income for the CPP Fund since we began. So that means 2/3 of the CPP Fund is from the profits generated from CPP Investments, after all costs, and 1/3 is from contributions. CPP Investments has been recognized for having one of the best 10-year track records of any of the world's major pension fund managers, and the CPP Fund is widely admired around the world as a safe and stable pension. While pension systems in many other countries are not functioning effectively, Canada is one of the few countries with a strong and resilient plan. Governments around the world contact us to better understand how they too can have a national treasure such as the CPP. They want to know about the strengths that have made the CPP and CPP Investments such a success story. And this is what we share. We've been managing the CPP Fund for 25 years through many types of market conditions, including the global financial crisis, the COVID years, and many more recent global events. And to achieve resilient long-term returns, we ensure the fund is diversified across asset classes and geographies. Diversification allows the fund to absorb the impacts when certain asset classes or certain geographies are experiencing periods of economic downturn. CPP Investments can also take advantage of the fund's scale to access better investment opportunities around the world. There is intense competition for top-tier assets, and we need to find ways to outperform and to secure our place. And while we invest the assets worldwide to diversify and responsibly grow the CPP Fund, the returns we generate abroad ultimately all come back to support pension benefits here in Canada. Through our work, you are invested in some of the most prized assets in the world, in addition to several leading Canadian companies, including Cordelio Power, an Ontario company that develops and operates renewable energy projects across North America. Shopify, one of Canada's greatest business success stories. Cameco, based in Saskatchewan, one of the world's largest uranium producers. And Wolf Midstream, Calgary-based world leader in the field of carbon capture utilization, and storage. Now, every 3 years, the CPP fund is assessed by the independent Office of the Chief Actuary to determine its sustainability. And I am pleased to share that the most recent report indicates the fund is expected to meet its obligations for at least the next 75 years. That means the CPP will be there for you, for your children, and your grandchildren. And finally, and perhaps most importantly, the assets in the CPP fund are strictly segregated from all government funds and protected from political interference. This means that no government can direct how or where we invest, and no government can use the funds within the CPP to carry out its own public policy objectives beyond paying pensions and benefits. Our only focus is helping to ensure your financial security in retirement. And as you saw in the opening video, this year marks 25 years of investing for Canadians, and we are all very proud of the work we've done over the past 25 years, and we commit to continuing to work hard for the next 25 and beyond. So thank you again, and Tara, let's get to the questions.
Sounds good. So for anyone watching live right now, you can submit a question by checking the little blue button in the bottom left-hand side of your screen where it says Ask Q&A. We also received a number of questions in advance, and we know we're not going to be able to get to every question that we've received today, but we will endeavor to reply by email after the fact, and we'll ensure you can contact us after the fact as well. So John, while the live questions are coming in, shall we start with one or two of the pre-submitted ones? The first one is, given the increasing number of retirees and potential demographic shifts, what measures are being taken to ensure the long-term sustainability of the CPP? How does CPP Investments manage the fund to meet future obligations?
Yeah, it's a great question, and it also provides the opportunity to explain a little bit of the difference between CPP and CPP investments. CPP is, sets the benefits, sets the contribution rate, really manages the actual Canada Pension Plan. Mm-hmm. CPP investments manage the surplus funds that aren't needed to pay out benefits right now. Mm-hmm. And so how we think about it is looking at our legislation in the CPPIB Act, the legislation that gives us a very well-defined mandate: maximize return without undue risk of loss, taking into account the factors that impact the funding of the plan, and doing it in the best interest of contributors and beneficiaries. Mm-hmm. So we look at that mandate, and we manage the portfolio in such a way to deliver on that mandate. I highlighted in my opening remarks the review from the Office of the Chief Actuary, mm-hmm. Which is very important, and I think everybody should be very pleased and proud that the most recent report, again, highlighted 75 more years of sustainability. Mm. So as we think about managing the portfolio, again, we look at that mandate, look at what the Chief Actuary has assumed for returns, and then build a portfolio to maximize return without undue risk of loss.
Great. And if anyone wants to look up more details on that report from the Office of the Chief Actuary, the OCA is a part of the Office of Superintendent of Financial Institutions, and you can find all of the reports on there. The one that John's referring to is the 31st actuarial review of the CPP. So maybe one more pre-submitted question. The cost to manage the CPP fund seems high against the 1 to 2.5% that individuals pay for third parties to manage their investment funds. How do you explain and justify this?
Yeah. So first I'll explain a little bit of our philosophy on cost. And I think we do take cost very seriously and really view it from an investment perspective, ensuring that we're getting a return on investment for every dollar we spend. Mm-hmm. And ensuring that we are investing in the right places in the business to ultimately drive the returns for the business. So we think a lot about the value that we derive from the costs we incur. Our operating expenses, which would be the cost for people, our general administrative cost, right now they're at about, at the end of last fiscal year, about 27.5 basis points. So that compares very well to many other asset managers, and that's the benefit of scale, right? And I think what's equally important is the operating expenses are trending down as a percentage of AUM. Asset management has operational leverage. And as we've built out this platform, built out this global footprint, we're experiencing the benefits of operational leverage. So our 5-year average is around 28.5, and we're sitting at about 27.5 of operating expenses. And that's something we're going to continue to really focus on, making sure that we're seeing that operational leverage in the business. Other expenses we incur are expenses to participate in investing markets, whether that be fees we pay to external managers, success fees or promote that we pay, which is a good thing. It means that they're driving returns, transaction costs, and taxes. Those can be episodic based on the amount of transaction activity in the market, but again, ensuring that we have tight control over those and that we are getting the returns that we expect from incurring those costs.
Great. And maybe I'll just mention for people, on the left-hand side of your screen, there's also a resources tab where you can find our annual report. And I believe the section on cost starts on page 45 if you want more details. So we'll start with the screen. So John, there's some pressure for CPP investments to invest in humanitarian or socially driven economic activities and to invest a certain percentage of the portfolio in Canada and in Canadian companies, funds, and opportunities. How do you account for these in your strategy?
Yeah. No, it's a great question, and certainly one that has been quite live recently. And in the first question, I highlighted our mandate and highlighted the mandate to maximize return without undue risk of loss, taking into account the factors that impact the plan, and doing that in the best interest of contributors and beneficiaries. CPP investments, we say it's 25 years because we got the first check for $12 million 25 years ago. The legislation was written in 1997, I believe, is when it came through. And at the time, the policymakers were very deliberate to create an entity that had a single fiduciary mandate. It was actively debated at the time whether there should be any type of regional economic development mandate, whether there should be a concessionary capital component to it, and a decision at the time that it should have a sole fiduciary mandate. Part of the reason for that is there was a looming pension crisis. This was the time when people were questioning the long-term sustainability of the CPP and a view that the greatest contribution will be to essentially contribute to the sustainability of a pension plan, to contribute to allowing people to live in dignity in retirement. And so the organization very much has looked to that legislation and to think about how we're going to manage the funds and ensuring that we're driving returns that ultimately contribute to the sustainability of the plan. I'll take the opportunity to highlight the returns again. 10-year returns of 9.1%. And that compares very favorably to most institutional investors around the world. And personally, one of the stats I'm really proud of is the 2/3 of the fund is actually from investment income. And it's showing that this vision that was put in place 25 plus years ago, it's working. It's working. And that the fund is compounding and growing. So we do think of it as we're here to drive returns. That's the mandate we've been given. Now, what I will share, though, is as we think about the investing process itself, we do incorporate a wide range of sustainability factors into our investing process. People have heard us say before, we don't do blanket divestment, but we do at a company-by-company level evaluate companies on sustainability-related factors, whether that be climate change, human rights, governance, with a view that companies that are effectively managing 21st century risks, they're just going to be more valuable in the future. It's a bit of an expectation going forward. So as we go through our portfolio, really focusing on the value that's created by incorporating the sustainability-related factors. And I'll say a few comments on kind of the discourse on investing more in Canada. Our portfolio today, our largest investment destination is the United States, but the second largest is Canada. It's the second largest geography for us, and it is going to continue to be a very important investment destination for CPP investments. We have the vast majority of our employees in Canada. We know the market pretty well. People have been trained in the Canadian market. We have some great assets. Our largest infrastructure asset is a Canadian asset. And we're going to continue to grow, and we're going to continue to build the portfolio in Canada. And with respect to the discussion, I would just share that we've been actively engaged in this discussion. And from my perspective, it's going to be a very constructive discussion. And the discussion has really been focused on how do we make Canada more investable, not just for pension plans, but how do we make Canada more investable? And that's a good discussion to have. It's going to lead to more capital, not just domestic capital, but foreign capital finding opportunities in Canada. So we have investments all over the world. We've been actively engaged in this discussion and sharing what we see as best practices around the world to attract capital.
Thank you for that. So we have a question from someone who's watching from Kitchener, Ontario, who says, first, congratulations on the success of the investments. There's a sad situation south of the border where the Social Security Fund is expected to run out. What are the near-term challenges the fund will face with the uncertainty in the US and Russia-Ukraine? So a bit on geopolitics there.
Yeah, a bit on geopolitics.
Well.
Yeah, I mean, I think, and obviously we're at CPP Investments, so we're a bit biased, but thinking back to what happened 25, 27 years ago, when policymakers came together to, in some ways, reformulate the CPP and create CPP Investments for what they saw as an issue in the future, and made some very difficult decisions at the time. I mean, it took real leadership to do that. And Canada today is one of the few countries in the world that has a really stable, resilient national pension plan. That's something I think everybody should be very proud of. We get calls, as I highlighted, from all over the world of people saying, like, how'd you do it? So it took real leadership. It also takes time. You know, the first check we received was for $12 million. And today we have $675 billion of assets under management. And it has been 25 years of being incredibly deliberate, incredibly focused on growing that portfolio in the best interest of contributors and beneficiaries. And many other countries around the world over the next 10 years are going to have some very difficult decisions around their national pension plan. On the geopolitics, I'd say this is something that we actually, I think, got ahead of a little bit. And quite a few years ago, we're building an internal expertise in thinking about how to incorporate geopolitics into our investment activities. Recognizing that the world was changing a little bit, that you're seeing some fragmentation in the world. And the question of how should this impact our investment activities? How should it impact our allocation? How should it impact our security selection? And put in place years ago, essentially processes within to evaluate and to ensure that we're comfortable with the geopolitical risk within the portfolio. It's been very helpful to us. We've shared publicly that we did not have any active positions in Russia when Russia invaded Ukraine, and that was from a geopolitical lens at the time, or a governance lens in some ways at the time. The world doesn't seem to be getting any less complicated, and I think this is an area that we're going to have to continue to focus on. And some really interesting discussions on, you know, whether it's deglobalization, de-risking, supply chains kind of wiring themselves around the world. It's not just a risk management, it's also a opportunity, right? And so incorporating that into our origination activities.
Okay, great, thank you. Our next question comes from Vancouver. Private equities have essentially no market value, which is very risky. Do you have plans to reduce investments in private equities? If not, why not?
Yeah. So I'll share a little bit about how we think about portfolio construction and share a little bit on the role of private assets in general within the portfolio. I mentioned in my opening remarks, we are big believers in diversification. We're big believers in diversification because of who we are and what we're solving for. in that we want a resilient portfolio over a very long time horizon. Forecasting markets is really tough, and being diversified across geographies and asset classes is important. And we also feel that it's important to have a allocation into the private markets, whether that be private equity, infrastructure, real estate, and even some private credit. The private markets provides an opportunity to get access to parts of the economy that may not be readily accessible through the public markets. And in the private equity space, I've also been a fan in some ways of the governance structure within private equity. So we have invested in private equity for going on 15 plus years. But as the question highlighted, I think the one area that everyone is focused on is valuations. There's not publicly available marks. And so as an organization, we've put in place what we believe to be a very rigorous process around the valuation of private assets that involves multiple external checks on our assets. And we actually have quite a bit of information on our website. And people can review our website and look through how we think about our private valuations. Our portfolio is actually marked to market, and values are done every quarter. So it's a big lift for the organization, but we feel it's important. As an investor, it's really important to have the best sense we have of the value of every asset in that portfolio. Now, so we put in, I believe, a very rigorous process. And one of the things that I take a lot of comfort in, and one of the things that I do look at quite carefully, is when we do have monetizations. So when we do sell an asset that is private, and with a portfolio the size of ours, there is always quite a few assets being bought and sold. I mean, we buy and we sell things. And always look for, when we sell things, are they being sold essentially at where we have it valued? And they are. Showing there's no real bias within that portfolio that we're under or overvaluing those assets.
That's a good check. So our next question comes from Okotoks, Alberta. Can you explain the operations and need for international offices? All the information is available without having to actually be there.
Yeah, it's a good question. And with respect to international offices, I think that's something we take, we don't take the decision lightly to open an international office. And when we do open an international office, it's often to support a specific investment strategy, where we believe that having a local presence will not only provide additional investment opportunities, but should also provide some risk management opportunities around the assets. So I'll use the San Francisco office as an example. It's one of our newer offices, and it's a office that is relatively small and comprised of a handful of individuals who are focused almost entirely into the technology space. It's actually primarily private equity professionals in the San Francisco office. And very much focused into venture capital, growth equity, and really being embedded into the ecosystem within the Bay Area. And with respect to that San Francisco office, we have two objectives. One is, it's always the first objective, is drive great investment returns. The second is to be that conduit of knowledge and insights into the rest of the organization. It's actually served us quite well over the past, I'd probably say, year and a half, in that the Bay Area has really been the epicenter of the generative AI boom. And that's been valuable to the rest of the organization to get the inflow of that information, and then to also be, in a very small way, part of that ecosystem.
Thank you for that. So we'll take a question from Toronto. If you have a mandate to invest without undue risk of loss, I think they're quoting you, how come you invest in fossil fuel companies who are actively contributing to the largest risk of loss that Canada has ever faced, climate change? What do you say to Canadians who lost their homes to forest fires caused by climate change?
Yeah, so I'll share a little bit on how we think about sustainability, and how we think about sustainability and incorporating sustainability into our investment activities. And I'd actually say we incorporate sustainability from both a risk management perspective and from an opportunity perspective. So one of the things that is a principle within CPP Investments is we do not pursue a path of blanket divestment. So we will not have blanket divestment of an entire industry, whether that be fossil fuels, and I'll talk more about that in a moment. But we do, company by company, put them through a screen to ensure that we are comfortable that each company is adequately managing sustainability-related risk. And it's climate change, human rights, governance, and that they're appropriately managing those. And if we feel that there is a gap in our expectation, we may either sell, we may vote on, if it's a public company, with our proxies, or if it's a private company where we have more influence, we will exert that influence. So in risk management, say we're comfortable really looking through the entire portfolio and with the assets we have. With respect to sustainability on the opportunity side, this is where we do believe that the transition does present an incredible investment opportunity. And one of our fastest growing portfolios is our renewables portfolio, where we have been investing in the renewable space for several years and continue to build a portfolio. And I think what's really exciting about that portfolio is we're invested in several companies that are now themselves growing and investing in more assets. And in fact, we see more demand for renewables than we can actually build. So, which from an investment perspective is great. With respect to the fossil fuel industry, we do believe that we need to continue to invest in oil and gas, and we need to continue to support the oil and gas industry. The demand for energy globally is not declining. I talked about AI, and that's further driving the demand for energy. And here we have an industry that has a long track record of delivering energy into the economy in a very safe and economical way. And we said, divesting is a short on human ingenuity. And so we will continue to invest, and we'll continue to invest and support these companies in their own transition. We have one company within our portfolio called Wolf Midstream. Great example where pipeline company, the first asset was half of the Access pipeline in Alberta. Then we acquired the second half of it. But the engineering expertise and know-how they have has also been translated into carbon capture and building out carbon capture. So here we have that engineering know-how being applied into investments related to the transition. And this is what we're looking for. And these are the type of investments we're looking for, and this is how we're engaging in the space.
The value of the full spectrum. And I would encourage people on that resources tab to, if you have a moment, look at the sustainable investing portion, and you can read more if of interest. So the next question, John, comes from Calgary. What is the risk to the CPP if Alberta withdraws from the CPP?
Yeah, so with respect to this discussion that's going on for a few years, and what we've always said is Albertans have every right to ask this question. CPP actually is and it's not always appreciated, CPP is a federal provincial construct. I mean, going back to when it was created in the 1960s and also then kind of reformulated in the 1990s, all the provinces came together, except for Quebec, who never participated, but came together with the federal government to really ensure the sustainability of the plan. So this is a question that Albertans have every right to ask. There's a lot of uncertainty, a lot of questions. Our role in this is just to be a subject matter expert. Our role in this is to share information and ensure that people can make an informed decision. I actually don't know the answer to some of those questions on how it would actually play out. We would not be involved in the number that I know has been debated. It's not our place to be involved in that. That's with the governments. We're here just to be a subject matter expert, to ensure that people understand the benefits of a national plan, the benefits of pooling of risk, the benefits of mobility of labor with respect to portability of pensions. So many of these questions we don't know and the answers to, And what we really do try to continue to focus on is delivering great investment returns, including for the 3+ million Albertans who participate in the CPP.
Yeah, that's actually a great segue to a questioner who's looking for a bit of clarification on something you said earlier. So it's from Edmonton saying, would you re-explain, please, John, in greater detail, the difference between CPP and CPP investments? I thought I heard that CPP manages the ins and outs of the Canada Pension Plan and CPP Investments manages the extra money. Can you please correct if I misheard?
Yeah, it's largely correct. And Tara is also an expert on this, so if I miss anything here. Yeah, I mean, so CPP Investments manages the surplus funds of the Canada Pension Plan. So the Canada Pension Plan is set up as a hybrid plan in that it is kind of mainly a pay-as-you-go plan where the majority of the money that comes into the CPP immediately goes out to beneficiaries. What isn't needed to immediately pay beneficiaries comes to CPP Investments to be invested on behalf of the contributors' beneficiaries in the best interest of contributors and beneficiaries. So at CPP Investments, we manage the surplus funds of the CPP, and if money is needed, we would send money, and if there's excess money, we would get money. But we manage the surplus funds, and we manage the surplus funds in alignment with the mandate in the federal legislation. The governments really are the overseers of CPP. And again, it's the participating provinces in the federal government, and they set the contribution rate. They set the benefits. And then it's administered really federally for simplicity reasons to ensure that you can have this, be able to go essentially across the country. So there is an important distinction here in that CPP Investments is not involved in the contribution rate, not involved in the level of benefits, and we're here to maximize return without undue risk of loss.
Right, and the first part rests with the governments that steward the Canada Pension Plan.
Yeah.
So we'll take a question from Calgary. A cursory analysis of your public disclosures indicates that the vast majority of your investments are outside Canadian borders. You talked a little bit about your philosophy on investing in Canada, but it says, can you comment on this?
Yeah, no. So as we think about the building the portfolio, so I think we have around 12% of the assets in Canada, and the rest diversified across the globe, with the U.S. being the largest. And this is really coming back to that principle of diversification, of ensuring that we are diversified across geographies and across asset classes. And this, at the end of the day, is prudent risk management. While we see tremendous investment opportunities in Canada and will continue to look to grow our Canadian portfolio, we also feel it's important to be diversified and to have that exposure in different countries. And as we think broadly, even though we're the manager of the surplus funds of the CPP, as we think broadly about the CPP, the contributions, they're 100% Canadian. And so you think about the long-term resilience, diversifying is valuable.
The demographics, all of those actuarial factors are
All of
Canadian.
those actuarial factors. And so this is the one opportunity within the whole ecosystem to get exposure to other parts of the world.
So we'll take a question from, actually it doesn't say where it's from, CPP's investments approach to active versus passive investment management. I'm asking what proportion of the portfolio is managed actively, and how does this contribute to the fund's long-term objectives?
Yeah, it's a great question. And as we look through the history of the organization, the decision to be active is one of the big decisions that the organization took, is to pursue active management, with a view that the organization would have some comparative advantages of scale, certainty of assets, and time horizon that would allow us to extract value over passive investing. You know, I have a very kind of simple mental model for this question that, as I think about the organization, and kind of a 2x2 matrix that I have in my mind of, on one axis, active versus passive, and the other internal versus external. and thinking about the different investment strategies that we run and which ones should we run active and which ones should we run passive. Now, I will say the concept of passive has become, we'll get into it in a moment, I think it's with the amount of screens that go on portfolios as to what's the definition of passive anymore, I think is debatable. So we have the majority of the money actively managed, but we still have a relatively large passive portfolio that also helps us with liquidity management within the portfolio. And we will only go into investment strategies from an active perspective where we feel that there is an opportunity to add alpha. And if we don't, we will have that money passively invested just to get that exposure. Right now, we sit in a very interesting time. And if we look over the history of CPP investments, the organization and active management has added value. And today, right now, against some of the global capital equity markets, most institutional investors around the world are challenged because of the concentration within the market. Within the global equity markets, which are now 70% US equity markets, and within those equity markets, they are highly concentrated into a handful of companies. I'm sure people have heard of the Magnificent Seven. We've actually made a very deliberate decision to not be as concentrated as the market in those companies. To be diversified into infrastructure, to be diversified into credit, to be diversified into government bonds. But those companies have done exceptionally well over the past year. And we look at our time horizon over the next 25 years, I do believe, and we believe, that the prudent thing to do right now is to be more diversified than the markets. And I think this is one of the challenges of quote-unquote passive investing right now, is it's so highly concentrated.
If anyone hasn't heard of the Magnificent Seven, they're essentially the largest tech AI-driven stocks in the US that are driving that concentration that John's talking about. Here's one, John. So any plans to invest in crypto assets?
Crypto.
I know you'll like this one.
So first I'd say that we have not directly invested in crypto. But we do watch it from afar. And it's a $1 trillion, I don't know if you call it an asset class. It's a $1 trillion set of assets. So there is a lot of capital in the space. So we actually do spend time watching it. We spend time trying to understand it. To date, have never been able to cross that boundary to actually invest. But look over the past couple weeks. With an asset showing that exactly what's driving some of the fundamentals of it, we could debate. So I think it's important for us to watch it, but today we have not kind of invested.
It's fascinating times when you talk about, is it an asset class? What's the definition of passive? There's a lot of meaningful trends in the industry. So the next question, how much trading of publicly traded stocks does CPP Investments do relative to just holding them long term?
Yeah, that's a good question. I don't have any quantitative analysis that I could share. So I could share more kind of philosophy or principles. And we are a long-term investor. And so within our active public equity group, which would be our active equity group, they actually run a reasonably concentrated portfolio. I mean, their job is to scour the equity markets and have high conviction views and invest in them. And they will typically hold those positions for a very long time. Like I was looking at one this week where we've held the position since 2011. It's a case where we actually held a position. Now, that's a position we've trimmed a couple times, but we've been in it since 2011. So on the active side, I think the expectation is it's a lot of work to gain conviction, a lot of work. And they will, and we are a fundamental investor at our
Core.
At our core. So then the expectation is you would probably hold them for a while. That being said, within the passive equity portfolio, the team will be rebalancing periodically, right? We may actually hold the underlying shares, so the team will be rebalancing. So there will be, transaction activity there, but they'll do it in a way to try to minimize transaction costs.
Because it's less about the individual security selection in that
Correct.
piece of a portfolio. Is that? So we'll take a question from Etobicoke, Ontario. How has the high interest rate environment in the last year affected the investment returns, and how will upcoming rate cuts affect future returns? What % of the CPP is invested in GIC type investments?
Well, I don't have the answer offhand on GIC type of investments, but I would say that we do actually have a relatively large fixed income portfolio. That fixed income portfolio would be longer duration than GICs. So we would typically hold we wouldn't hold a lot of cash, we'd hold liquid securities, and our fixed income portfolio would tend to be more around a 5-year type of duration, and it's a relatively large fixed income portfolio. And you can see in our annual report, actually, we break down how much fixed income we have. Interest rates rising certainly has had an impact on the global capital markets, and probably a few things worth touching on. Obviously, fixed income investments and institutional investors will hold fixed income and hold credit. As rates rise, that has a negative impact on the market value of fixed income. So that, we've certainly felt that in the fixed income portfolio. We do have a relatively large equity portfolio, and while that's been reasonably resilient through this period, obviously there's been an increase in the cost of borrowing for these companies, and that has an impact. Rising rate environments are always challenging for valuations. It also increases the discount rate. But I do look at our returns. So our returns over the past 5 years, and you think about what happened in the past 5 years, it's a pretty exciting time in the past 5 years. Our 5-year returns are 8%. Our 10-year returns are 9.1, but our 5-year returns, even through this period, was 8.1%. Our outlook on rates going forward is I think what we would, it's very hard to forecast rates. I think we would assume rates will stay higher. And rates will stay higher. And so the portfolio is definitely not built around an assumption that we're going to see rates going down. Try to build a portfolio that is resilient to rates being higher for longer. It gets to a little bit, one of our investment philosophies is, we just need a portfolio that is a super tanker. I call it a super tanker, that whether rates are going up, rates are going down, inflation is high, at $675 billion, it needs to just push through things. It's very hard to move a large portfolio of that size, so it just needs to be very resilient to a range of macroeconomic conditions. Thinking back to the past few years, I think one of the biggest challenges for institutional investors around the world was the supply side shock that came out of COVID, where you had inflation, rising real rates, and a declining equity markets. That's a very challenging market. But through that time, as we highlighted, we have 8% returns.
And you referred earlier to the asset class composition of our portfolio, which I think is on page 31 of the annual report that's in the resources tab, if that's of further interest. Another question from Calgary. The CPP has significant assets, stock and real property in Chinese markets. What sorts of hedges are in place to reduce the risk from there?
Yeah. So I'll talk a little bit about our approach to investing in emerging markets, including China. Talked a lot about diversification today, and kind of that view of the importance of diversification. When we look at emerging markets, what we see is an opportunity to invest in growth, an opportunity to invest in fast-growing economies that are going through like a rapid kind of industrialization, a rapid modernization. So we do invest. I think now we have about we'd look to have about kind of 15-16% of the portfolio in emerging markets. And that would be focused, though, on the larger emerging markets. We tend to focus on the larger, faster growing emerging markets. Now, I would share, and as is evident from our annual reports, our appetite for emerging markets has declined. I think based on some of the geopolitical considerations that we highlighted earlier, our appetite for emerging markets has declined, and in certain countries declined quite a bit. So we still feel that with respect to China, it's the world's second largest economy, that it's important to have some exposure to the world's second largest economy. It's definitely reduced from where it was historically. But the one thing we also, as we think a lot about is not just how much should we have invested, but how should we get it? How should we actually invest to get that exposure that we want? Thinking long and hard about what instrument, whether it be fixed income, whether it be equity, whether it be credit, and long and hard about public versus private, and which sector. So, our portfolio in every country tries to be quite well thought out to ensure that we have the liquidity that we need.
Great. And next question, what will be the role of AI moving forward? You talked a little bit about the Mag 7, but thoughts on AI generally, I guess.
Yeah, lots on AI generally. This is a difficult question, and probably multifaceted. So I'll talk a little bit about our portfolio, and then I'll talk a little bit about how we think AI is changing us and the investment world. As we look through the portfolio, obviously thinking about how do we participate from an investment perspective at the right level, maybe less than the market wants to, but at the right level in AI. And that includes investing in some of the public companies, like the Mag 7, the NVIDIAs of the world, the Alphabets of the world, but also investing in some of the underlying pipes, right? And I think we're pretty keen on data centers. We don't know who's going to win all the time, but sometimes investing in the picks and shovels is a good place to be as the people figure out the technology. So from an investing perspective, it's more than just our tech team, our real estate team, our infrastructure team. I mentioned earlier, energy. Like, the energy demand is incredible for these data centers. It's incredible. And so we actually have teams focused on, from our infrastructure team, our real estate team, and our energy team, they're one transaction team to think about data centers on how to actually invest in the space. So from an investment perspective, thinking how's it going to impact the portfolio, where are the opportunities, and where are the risks? Are there some industries that are going to be really negatively impacted by AI? Internally within CPP Investments, we've also tried to really embrace Gen AI in some ways from just a learning perspective on ensuring that our colleagues have a certain level of fluency and familiarity with the technology. Like many firms, we've put Copilot in people's hands, which is a Microsoft product. People have access to various large language models. We see kind of a 5% productivity improvement in these. So definitely thinking about this. How can we be more productive? As my colleagues know, I'm very focused on productivity, and how can we become more productive, and how can we use these tools to be more productive? But we're not taking our eye off of kind of bigger applications. I think right now we see the opportunity to use Gen AI to make decisions faster. Can Gen AI make decisions? I don't know. But we think it's important to kind of stay close to the technology. It isn't our desire or ambition to be a world leader, but to really understand how this could impact our business and where. We talked about cost earlier on. We talked about investment returns. Where can Gen AI help us drive higher net returns?
A lot of that is similar to when you were talking about the San Francisco office in terms of ensuring that we're staying close to the evolution, which makes sense. A question from Edmonton. The CPP is currently mandated through legislation to be at arm's length from the serving government, which is great. If this government or any government in the future wishes to access or influence the CPP, could they legislate themselves more power to persuade CPPIB to invest in what the government wants them to invest in?
Yeah. So for this question, I'll just share a little bit on the governance structure of CPP Investments. And again, going back to when the stewards, and these were the provincial finance ministers and the federal finance minister, they came together to kind of reformulate CPP and create CPP investments. Enshrined in the Act is a governance framework where any changes to the CPPIB Act requires 2/3 of the provinces representing 2/3 of the population of the participating provinces to change. So at the time, they ensured that they put in a very high governance standard for change. And I just share that to date, the relationship that we have with all of the stewards across the country has been incredibly constructive and productive. And our expectation is that will continue to be. We were looking the other day, and in the 25 years of history for CPP investments, there's been 50 federal and provincial elections in Canada. And through that time, we've worked with many different stewards, many different provincial and federal finance ministers, and all have shown great respect for the organization.
Great. So our next question, how much money does CPP Investments have in unfunded liabilities? What is your specific plan to resolve that? And when will you be using the assets in the CPP fund to cover those liabilities?
Yeah. So to answer this question, I don't have a definitive answer. In some ways, going back to some of the earlier questions on the role of CPP versus CPP investments. CPP, as I said, it's a hybrid plan. It's largely pay-as-you-go, and then there is some assets. With CPP investments, it's managing the surplus funds. With respect to liabilities, these are really questions around the CPP. Liabilities that have already been accrued and potentially future liabilities that have already been accrued. That's managed within the CPP, and we manage the surplus funds.
Yeah, and those unfunded liabilities, I think, are by design, and you can read more about it in that 31st actuarial report that we referenced, which is on the Office of the Superintendent of Financial Institutions website if you go to the portion for the Office of the Chief Actuary. Our next question. You mentioned that the majority of the CPP investments are in the USA. Could this be a risk given the incoming government?
Yeah. So just for clarification, it's our largest investment destination, but the majority of the assets are not there. It's around 35% is in the U.S. So it's our largest investment destination. So how we would think about geographic diversification. We have a 75-year time horizon. And we have the expectation that with our investment activities, we will invest through many different administrations, both domestically and abroad. We have the expectation that we will invest in administrations across the entire political spectrum. And so we need to build an investment strategy that is not predicated on a certain party being in power. That's not how you build a resilient portfolio. So this is really the focus of how we think about building the portfolio, is not have it dependent on what happens in a given election.
Makes sense. So this is going to be our last question. It comes from Halifax. You guys seem to be doing a good job of creating value for workers with respectable returns. Have you ever considered a voluntary contribution on top of the CPP contribution? Well,
it's a question we've heard before, and I think that is, again, we are the manager of the CPP fund. We're the surplus manager. Questions around contribution rates, questions around benefits, those are questions for the stewards of the plan.
Great. So we're running out of time, John. Are there some words that you wanted to say to bring us to a bit of a conclusion?
Well, first, I just want to thank everybody. I want to thank everybody who participated in the meeting, and certainly thank everybody who asked questions. This is important to us. It's important for us from a transparency perspective to give you the opportunity to ask these questions. We've highlighted a few times through the call on other resources that are available, whether it be our annual report, our report on sustainable investing, our sustainable investing policy, and I would encourage people to go and look at those reports on our website. Now, I'll end where I started, and that's on the investment performance. I think I speak behalf on all of my colleagues at CPP Investments, that we're very proud of the success that we've had, and contributing 9.1% return over the next 10 years. And I know that we are all very dedicated and committed to continuing to deliver strong investment performance for the contributors and beneficiaries of the Canada Pension Plan. Thank you.
Thanks, John. And we also appreciate any feedback that you want to provide. There's a feedback form on the left-hand side of your screen as well. And we know that we didn't get to all the questions today, but you can ask us a question anytime at contact@cppib.com. Thank you again, as John said, for attending today. We really appreciate you taking the time.